Welcome to our deep dive. We're tackling Bitcoin futures ETFs today.
Seems exciting.
It is. We've got three sources to unpack, and by the end, you'll know what these ETFs are.
And how they work, of course.
Of course. Plus their history, how to invest, even some surprising connections like the 2024 election.
Yeah, the demand surge after that was wild.
It really was. Okay, so first things first. What is a Bitcoin futures ETF? Someone hearing this for the first time, what are we even talking about?
Imagine wanting to ride that Bitcoin wave.
Price movements.
Exactly.
Yeah.
But without actually owning Bitcoin. No wallets, no keys, none of that.
You're just betting on the price, right?
Yeah, but through a familiar channel. That's where these ETFs come in. They hold futures contracts.
Futures.
Agreements to buy or sell at a set price in the future. Bundled up, traded on regular exchanges.
So you're not buying Bitcoin itself, but a contract reflecting its future price.
Precisely. And this all came about because the SEC initially blocked ETFs that directly held Bitcoin.
Ah, so this was the workaround.
Exactly. First one. The ProShares Bitcoin Strategy ETF, ticker BITO, got approved October 2021.
Wow, so it's been a few years now. But why were futures seen as more palatable than just holding Bitcoin?
Two reasons. One, futures markets are already heavily regulated, more oversight, more stability for the SEC.
Makes sense.
And two, futures contracts are settled daily. Less risk of price manipulation compared to just buying Bitcoin at that time.
So it was a more controlled environment, paving the way for spot Bitcoin ETFs in early 24.
Absolutely. They showed the demand was there, but in a regulated framework, it shifted the SEC's view.
Okay, so let's talk investor appeal. Why did these ETFs become so popular?
Three things. Security, affordability, familiarity.
Break those down for us.
Sure. With an ETF, you don't need to manage your own crypto. No security risks there.
Like those scary wallet stories you hear about?
Yeah. Plus, you can invest with less money. A whole Bitcoin is pricey, but ETFs let you dip your toes in.
And familiarity.
ETFs are known, unlike crypto exchanges, which can be intimidating for newcomers.
So it's like, I know how stocks work, so this feels similar.
Exactly. You're participating in this new asset class without having to become a crypto expert overnight.
But of course, there's always another side. What are some limitations investors should consider?
Well, one is tracking error. The ETF's price might not perfectly mirror Bitcoin's future price.
Because of fees and stuff?
Yeah, fees, expenses, complexities of managing those contracts. It's usually not a huge gap, but it's there.
Okay, so it's not perfectly one-to-one. What else?
Liquidity can be an issue, especially with newer ETFs. Fewer buyers and sellers make it harder to trade at a good price.
Ah, I see.
And of course, regulations are always changing in crypto. That adds uncertainty.
Right, because those changes could impact the ETFs in ways we can't predict.
Exactly. And while the ETF structure is safer than holding Bitcoin yourself, the underlying market's still vulnerable.
Like exchange hacks and such.
Right. So it's always a balance of potential rewards against the risks.
Let's take a step back now. Historical journey. Where did Bitcoin futures ETFs even come from?
It starts with Bitcoin itself gaining popularity. As early as 2013, people wanted a Bitcoin ETF.
2013, that feels like ages ago in the crypto world.
It really does. The Winklevoss twins even tried, but the SEC wasn't having it.
They were pioneers.
They were. That reluctance pushed Bitcoin futures ETFs forward. They were the compromise. And finally, January 2024, spot Bitcoin ETFs get approved.
Over a decade later. But for a while, futures were the only game in town.
Exactly. They brought Bitcoin investing to a wider audience before the spot ETFs were a thing.
So if someone's intrigued and wants to explore, where do they begin? What are some options out there?
There are several traded on the NYSE and NASDAQ. The ProShares Bitcoin Strategy ETF, ticker BITO, that was the first one, October 2021.
A piece of history. Anything else notable?
The Valkyrie Bitcoin and Ether Strategy ETF, that's BTF. It combines both.
Interesting, 2 for 1.
Right. And the Global X Blockchain and Bitcoin Strategy ETF, that's BTSC. It blends futures with blockchain companies.
So choices depend on your goals and how much risk you're comfortable with.
Exactly. But before strategies, there's this fascinating tidbit from our sources. 2024 election, Trump and the crypto surge.
Like how politics impact markets, right?
Right. Trump's pro-crypto stance during the campaign boosted demand for Bitcoin and Ether ETFs. Prices surged.
Wow, his words actually moved the market.
They did. And Ether actually outperformed Bitcoin after the election, showing growing interest in altcoins.
So maybe Trump's stance helped the whole crypto market.
Possibly. Ether ETFs got $466 million in the last week of November alone. Bitcoin ETFs had a record $6.5 billion that month.
Incredible numbers. It wasn't just a Bitcoin bump, it was broader. So we've got regulations, investor interest, and even politics shaping these ETFs.
Yeah, it's a dynamic space for sure.
Now, before we move to part 2, there's a trend beyond Bitcoin. Altcoin ETFs. Solana, Litecoin, Ripple's XRP, they're getting attention.
Yeah, and Ripple's XRP surged 376% in just 30 days, probably due to expected regulatory changes.
That's massive. So the impact is spreading beyond Bitcoin, fueling optimism.
Definitely something to watch.
For now, let's turn to a resource. A list of the best crypto ETFs. Covers Bitcoin, Ethereum, the whole industry.
A great starting point for exploring strategies.
Exactly. Starting with the big ones. iShares Bitcoin Trust, that's IBET, and the iShares Ethereum Trust ETF, ETHA. What makes them stand out?
They're solid for direct exposure. iShares is well-established, known for large liquid funds.
So simple and straightforward.
Yes. You track the price without dealing with exchanges.
Now, for those who, like a more established player in the crypto ETF world, what else is there?
Grayscale. They've been dominant for years. Their Grayscale Bitcoin Trust ETF, GBTC, very popular. And they have a cheaper version, Grayscale Bitcoin Mini Trust, that's BTC. Same exposure, but smaller minimum investment.
So for people who value experience, Grayscale is a good option.
Absolutely. And they have Ethereum ones too. Grayscale Ethereum Trust ETF, ETH, and the mini Grayscale Ethereum Mini Trust ETH.
Got you covered either way.
Indeed. Then there's the Roundhill Bitcoin Covered Call Strategy ETF, ticker YBTC, good for income generation.
Income. From a Bitcoin ETF, how does that work?
They sell call options on some of their Bitcoin. Generates premium income paid to shareholders. Over 21% yield right now.
Wow, that's a nice bonus.
Exactly. Growth and income combined.
Now, for those interested in the bigger picture, are there ETFs covering the whole industry, not just coins?
The Global X Blockchain ETF, that's BKCH, tracks an index of crypto industry stocks, mining, exchanges, the whole ecosystem.
Like investing in the tools, not just the gold itself.
Perfect analogy.
Now, for the risk takers, any ETFs that offer more leverage.
The Defiance Daily Target 2X Long MSTR ETF, MSTX. It aims for twice the daily return of MicroStrategy, a company holding tons of Bitcoin.
So if MicroStrategy goes up 5%, this ETF aims for 10%.
Yes, but leverage is risky. Big gains, big losses.
High risk, high reward.
Right. Understand the risks before going that route.
Okay, we've covered a lot. What these ETFs are, their history, the risks, even political impacts and altcoins.
A lot to take in.
It is, but it's just the beginning. In part 2, we'll get into the technical stuff. Contango, backwardation, rollovers, and the wild world of decentralized finance.
Looking forward to it.
Me too. Stay tuned.
Welcome back to our Bitcoin Futures ETF journey.
You know, it's crazy how we've gone from barely getting Bitcoin to now, like, dissecting these ETFs. It's a lot.
It shows how fast things move in this space. And speaking of complex, there's this concept, contango and backwardation, kind of key to how these ETFs work.
Ooh, those are some words. Gonna make my brain melt. But go on, enlighten us. What are they and why should I care?
Okay, imagine a farmer's market. You see amazing strawberries.
I'm listening.
You want them, but not to eat till next week.
Hmm.
The vendor's got two options. Pay extra now, reserve yours for next week.
Okay.
Or slight discount, but you pick them up later, maybe not as perfectly ripe.
Gotcha. So paying extra now, that's like contango.
You got it. Future price of Bitcoin is higher than now, like a premium for locking in that future price.
Makes sense. And the discount, risking less perfect strawberries later, that's backwardation.
Exactly. Future price is lower than now, you get a discount.
Yeah.
Because there's a risk of waiting.
Okay, strawberry analogy, got it. But how does this apply to the ETFs?
Remember, they hold futures contracts, and those expire. To stay in the Bitcoin game, the ETF managers have to roll over those contracts.
Roll over.
Yeah, sell expiring ones, buy new ones, so they always have exposure.
So constantly replenishing their Bitcoin futures, basically.
Exactly. Now, if it's contango, they pay extra for the new contracts. That hurts their returns. But if it's a backwardation, they get a discount, boosting returns.
So contango versus backwardation, that directly impacts how well these ETFs do over time.
It's one of those hidden things that can make a big difference. Knowing the futures market matters for these ETFs.
This is why we do this deep dive, uncovering all these layers. Okay, let's talk risk. Always on an investor's mind. What risks come with these Bitcoin futures ETFs?
Well, you can't escape Bitcoin's volatility itself. Big price swings.
Up and down. Yeah.
Exactly. And those swings, they're even stronger in the futures market. So if you're in, got to be comfy with some risk.
Right, because even though I'm not holding Bitcoin directly, I'm still riding those waves.
Right. Then there's that tracking error we mentioned. The ETF might not perfectly follow the Bitcoin futures price.
Because of those fees and stuff, right?
Right. Fees, operational stuff, it's not a perfect match.
Okay.
And then regulatory risk. Always there.
Yeah.
Crypto regulations are changing all the time.
Never a dull moment.
Nope. A sudden change, that could really impact these ETFs. And while ETFs are safer than holding Bitcoin yourself, the whole market is still exposed to, well,
Hacks, security breaches.
exactly. Exchanges get hacked. It affects everything. So yeah, not a perfect safe haven.
Got to be realistic about the downsides.
Absolutely. Weigh the risks against the potential.
Okay, let's say I've heard all this, I've weighed it all, and I want to try these Bitcoin futures ETFs. Where do I even begin? What should I do?
First, education. Always. Don't just jump in because Bitcoin is the hot topic.
Yeah.
Really understand what these ETFs are, how they work, the risks.
Do your homework first.
Right. Then what are your goals? Short-term gains, long-term. How much risk can you handle?
Like figuring out my Bitcoin ETF journey before I set off.
Exactly. Once you know that, find a good broker, one that offers lots of these ETFs.
Shop around a bit.
Yeah. Look at their fees too. They can eat into your profits. Oh, and one more thing. Always diversify.
Diversify, like even within Bitcoin ETFs.
Yeah. Don't put all your money on one single ETF. Spread it out a bit, different asset classes, manage your risk overall.
Good advice. Never hurts to be too careful. Now, let's switch gears a bit. Decentralized finance, DeFi, everyone's talking about it. I gotta admit, I'm kind of lost. What is it and how does it fit with all this ETF stuff?
DeFi, it's basically trying to build a whole new financial system. Bold. Right. Independent of the traditional banks and all that. Uses blockchain, so it's peer-to-peer, no middleman.
So like a parallel financial universe.
Exactly. Individuals have control, interact directly, and within DeFi, there are these decentralized exchanges, DXs, peer-to-peer marketplaces for trading crypto.
So instead of Coinbase or Binance, I'm trading with another person directly on the blockchain.
You got it. DXs offer privacy, security, you control your own stuff. No central authority, so less risk of hacks.
Sounds pretty good, especially with all those exchange hacks we hear about. But there's got to be a downside, right?
Of course. They're more complex to use, often not as much liquidity or user-friendly as the big exchanges. And they're still new, so higher risk of bugs or vulnerabilities in their code.
Like choosing between a familiar road and a risky shortcut.
Yeah, great way to put it. So how does this all tie back to Bitcoin futures ETFs? While DeFi isn't directly affecting the ETFs we have now, it's creating this whole other system that's attracting a lot of attention and money. This DeFi growth will likely influence how ETFs evolve, maybe even lead to new products that combine the best of both.
So they're separate for now, but maybe converging in the future.
Yeah, something to think about. And this brings us to another important concept, rollovers. Remember how those futures contracts expire?
Right, they don't last forever. So
Uh-huh.
what happens then?
That's where rollovers come in. Selling expiring contracts, buying new ones to maintain that Bitcoin exposure. It's just part of managing a futures-based ETF.
So swapping out the old for the new, keeping things running.
Exactly. And here's the thing for investors. Depending on contango or backwardation, rollovers can either add to or hurt the ETF's returns.
Because of those premiums or discounts we talked about earlier?
Precisely. Contango, ETF loses a bit buying new contracts. Backwardation, they might gain a bit.
Like a hidden cost or a bonus, depending on the market.
Exactly. So due diligence is key. When you're choosing an ETF, really look into its rollover strategy. Some are better at managing those costs than others, and that affects the performance in the long run.
So it's not just about the ETF itself, but also how they handle those rollovers behind the scenes.
Right. It's all interconnected.
Okay, my brain is full. Contango, backwardation, rollovers, DeFi, DXs, so much info.
It is a lot, but that's the crypto world for you. Complex and always changing.
And we're not done yet. We've still got more to uncover.
We're just getting started. Buckle up for part 3. We'll be looking at the bigger economic picture, the AI impact, and leave you with some big questions to ponder. Stay tuned.
Back for the final part of our Bitcoin futures ETF deep dive. We've gone deep, but now let's zoom out a bit. Macroeconomics, the big picture. How does all that stuff affect these investments?
It's a good point. Bitcoin and these ETFs, they're not in a vacuum. The whole world's economy plays a role.
Okay, so macroeconomics 101. What are the big factors that can move Bitcoin's price, and therefore how these ETFs perform?
Well, the US dollar is a big one. Bitcoin's usually priced in dollars, so if the dollar is strong, that can push Bitcoin's price down.
Makes sense, like a seesaw, one goes up, the other down.
Exactly. But a weak dollar can make Bitcoin look good to international investors, so the price could go up then.
Okay, so gotta watch the dollar. Anything else?
Inflation, big topic. People say Bitcoin's a hedge against inflation, but it's not always so simple.
Right, inflation makes everything more expensive, so does that mean Bitcoin goes up too?
Could happen. High inflation makes your dollars worth less, so maybe Bitcoin looks better. But high inflation also usually means higher interest rates.
Which makes borrowing more expensive, right?
Right. And that can make investors shy away from risky stuff like Bitcoin.
So it's a push and pull. Inflation, interest rates, how people are feeling about the market, it all gets mixed in.
Exactly. And then there's geopolitics. Can't forget that. Wars, big political changes, that kind of stuff.
Right, like if there's a lot of uncertainty in the world, people might turn to Bitcoin.
Yeah, looking for something stable outside the normal systems. Bitcoin kind of has that reputation, digital gold and all.
Immune to whatever governments are doing.
That's the idea, but Bitcoin's still pretty young. We're still learning how it reacts to big world events.
That was a big experiment.
It really is. Speaking of experiments, what about AI? Can't ignore that. It's changing everything, including finance. How is it affecting these Bitcoin futures ETFs?
Good question. I feel like AI is everywhere these days.
It is. Well, some big investors are using AI algorithms to analyze market data, trying to predict which way prices will go.
Those algorithms can do so much more than humans, right?
They can process tons of information, find patterns we might miss, like a superpowered analyst working all the time.
But it's not perfect, is it?
Nope. Algorithms can be wrong, the data they use can be biased, and there are always surprises that no one sees coming.
Right, because even with AI, it's still humans making the decisions at the end.
Absolutely.
Yeah.
AI gives us more power, but it doesn't replace us. So we've covered a lot, but the future of these ETFs, it's still a bit of a mystery.
Which is kind of exciting.
It is. So as we wrap up, here are some open questions to think about. The answers, who knows? But they're worth pondering.
Hit me with those questions. What should our listeners be thinking about as they go forward?
Well, will these futures ETFs stay on top? Or will spot ETFs, those that hold actual Bitcoin, become the main thing?
Interesting. And regulations, those are always changing. How will that affect things?
Big question. And what about decentralized finance, that DeFi world we talked about? Will that change how these ETFs work? Could we see ETFs tracking futures traded on those decentralized exchanges?
Wow, that's getting pretty complex. So much to think about.
The crypto world is always pushing boundaries. It's all about being curious, thinking critically, not just believing everything you hear.
Well said. So as we end this deep dive, keep exploring, keep learning, and most importantly, never stop asking questions.